Good morning. This is Bruce at Fleet Capital Management. It is Saturday, the 29th of July, 2023. We're going to take a quick look at the market, a little bit about seasonality and a little bit about stop management. And I will try my best to keep this quick, but I think you'll find it interesting. We always need to say the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please subscribe to this YouTube channel. And as always, and you know this, whenever you have a question, I'm always available for you. Bruce at fleetcapitalmanagement.com, homepage of our website, which is fleetcapitalmanagement.com. Two buttons. This button on the bottom will take you to our most recent weekly market analysis videos, and this button will put you on my Zoom schedule so you and I can have a chat about anything that's on your mind. Okay, seasonality. I have shown you this before. This is by quarter, and what this gentleman did, this is actually Tom Bowley who made this. You've heard me mention him before. He is a favorite analyst of mine. He took each quarter and split it in half. So first half of second quarter, second half. So we are right here. We're in the second half of the third quarter, or we're getting really close to it. It starts mid-August, so 2 weeks from now. And that has in history been one of the worst parts of a quarter. And I'm going to expand that out, and I'm going to show you, and then we go into the strongest quarter, the fourth quarter. But I'm going to expand that out. I was working on this. This is actually 34 years of data on the S&P 500. So I've got 34 years in here. And what I was looking for is what are the number or the percent of months in which the S&P closed higher than it opened. And this is from 1990 to 2023. And it could have been higher by 1% or 1/10 of 1%. I'm going to show you that in a moment. But the things that I've highlighted are August and September. Not only do they have the lowest percentage of positive months, and you may look at this and say, well, nothing wrong with that. Over 50% of the time, it's positive. That's true. But we're looking for relativity, and these are the lowest positive averages. But if you look down here, here's the actual average rate of return for August. And this is taking Augusts that were positive and Augusts that were negative for 34 years. The average rate of return in August is a negative 0.6%. The average rate of return in September is a negative 0.8%, so less than 1% being down. But again, you can see these have the worst percentages of times that they were positive, and they also have the worst averages on the month. Now, right after we pass this period, we move into the last quarter. And if you look at those average rates of return, they're pretty strong. So when we look at October, for instance, let me go back to the other chart. Right here, October 1st to November 15th, it has been very strong. And then the second half of that quarter. So what does all this mean? What this means is this, generally speaking, August, September is the weakest time of the year. Does that mean that it's impossible for the market to go up 2% or 3% in August, September? No, anything can happen. All we're looking for is probabilities. Now, we have been stopped out of 4 or 5 stocks, and I'll get to that in a moment. But I'm not sure that I'm going to add more positions, or at least too many more positions during August and September. So you may notice for those 2 months that you have a little higher average amount of cash in your account. That's by design, just because the evidence suggests that these are weak months. And then as we get towards October 1st, that's when I'll start adding. I plan on bringing all accounts up to about 100% invested, because this is the strongest quarter. Does that make sense? Okay, let's go over to our trend matrix. And you will see that as of Friday, our shortest term, which is based on daily metrics, are up. Our little bit more conservative but moderate is up. And so I use these for when I'm going to place stocks in group 1 accounts, group 2 accounts, but right now it's all up, and we've talked about seasonality. And then I even circled this. I colored the box and circled it because I want your eyes to be able to go to this every week whenever you watch these videos. This is critical. This is that 8/21. This is a daily EMA, or exponential moving average. And what this means is if the 8-day is above the 21-day, and I'm going to show this to you on a chart in just a second, it's green. If the 21-day, or if the 8-day is below the 21-day, it's red. Well, what does that mean? If this box is red, I am prohibited by my own system from adding new positions to your account. That's what it means. We're in some kind of a little pullback or correction that could lead to a bear market. I mean, we just don't know those things. But when the 8's under the 21, that's just considered a pullback. And that may change, a couple days later, but it's a good first indication. And then this is the 10-week exponential moving average over the 20-week exponential moving average. That's what weekly EMA stands for. And when the 10's over the 20, it's green. If the 10 is below the 20, it's red, and we are in a bear market. So this is the first step. This just puts things on hold. And then if by chance this turns red, we're in a bear market and we change all strategies. This is our bear market avoidance indicator right here. This is an early signal that something may be happening. You'll see this flip red, green, red somewhat often, but it's just an early indicator. This is your bear market warning. Okay, so let's go look at that on a chart. Let's go over to this chart first. This is the S&P 500 on a daily. This is the S&P 500 on a weekly. Looking at the daily, the white line is that 8-day moving average, and the blue is the 20-day moving average. Okay, so that's where we get this from, 8/20. And then on the left-hand side, these are weekly bars. Each bar is 1 week. The green line is the 10-week moving average, and the red is the 20-week moving average. When the 10 is above the 20, we're green and we're fine. Okay, so now when you see this, whether you're watching a recording of this or at any time, you can just let your eyes go right here. These are the two most important signals on this entire chart. And then there's others that I use for different trading setups. Okay. What you will notice is we've had a little bit of weakness. This is the Go No Go platform, one of the platforms that I use. Dark blue bars mean strong uptrend. And then these lighter bars, I'll call those aqua, just means we're still in an uptrend, which is obvious. The 8 is over the 20, but it's a little bit weak. We're losing some momentum. And this past week has been a little bit weak. Well, that happens in an uptrend. That's not abnormal. As long as the 8's over the 21, we don't really worry about it. We look at it, we pay attention, but we're still in an uptrend. So you can see how often that happens. Down here, this is just a momentum indicator that we use. When the momentum indicator is in the 5 to 6 range, generally means we're going to have a little bit of a pullback. Here we had a little bit, it was a little bit weak. So that's all that means. Okay, so everything looks good so far. Let's go to this chart. Here is the S&P 500 on a daily basis. This is Friday, Thursday, Wednesday, Tuesday, Monday. I'm going to make that a little bit bigger so it's easier for you to see. So this is the week we just came out of, and it was just sort of a near flat week. The market opened right here on Monday, and it closed just a little bit above it. So we had a positive week, but nothing to write home about. Here is let's see, here's the week. The S&P was up 0.71%. Actually, that's better than I thought. That's not a bad week. But it is flattening just a little bit. So we've lost a little bit of momentum. You can see this green line here, which is a directional indicator, has lost a little bit of momentum. That's okay. I call that breathing. The market has to breathe. The market goes up and then needs to take a breath, and it goes up really strong, and it's going to need to take a little bit bigger breath. And then the market goes up and it needs to take a breath. The market goes up. We might be taking a breath right here, but we'll wait and see. Okay. The MA ribbon, there you've got your 8, 21, and 50-day moving averages. Everything looks good on that. Here's my Hull ribbon. Everything looks good there. My linear regression, we are not at the top. Actually, we're right here, which is a very healthy place to be. Anywhere in this middle zone is a healthy place to be. Not real worried about that. So everything looks good right now. I'm just worried about the seasonality. Here is our super trend, which is ATR, average true range. That looks fine. So everything looks good to me. I'm just a little bit worried about seasonality. That's all. Okay. Let's talk about stop management for a second. We were in Tesla and there was an earnings, and here was our stop right there. And I don't remember which day it was. I think it was right. Actually, it was right there. We got stopped out of Tesla. The next day it went up, and then it came back down, and then it had another bad day and closed below our stop. And it's just sort of hugging where we got stopped out of it. Not terrible, but I love Tesla. I don't like what I'm seeing down here where this red, it's hard to see, is above the green. And I also don't really like this. This is my true strength index is starting to fall. I get very concerned if it goes below zero. So maybe Tesla is going to take a little bit of a rest. It had such a long uptrend. And I would love to be able to buy it again down in this area if the market lets us do that. We saw a little gap in price here. There was a gap in price here. Generally speaking, those gaps will be filled. It was filled right there. This gap has not been filled. So maybe Tesla goes down into this area below this swing low and to fill this gap. And that might be an interesting place to buy it again. So I won't go through all of them, but there were a couple. Let's go to now. This one, we got stopped out right there with a small profit. And then the next day, which was Friday, it started to go back up again. And this was earnings day. This stuff tends to happen on earnings day. It can go really big up, really big down. But in any event, the story is I love this company. It took a big run up. It took a big run down. I'm looking for another place that I can buy this. There was a very small gap right here. Maybe it goes down to fill that gap and we can buy it cheaper. I am working, I've told many of you that stop management is the absolute most talked about, most argued about, most debated subject in the investment industry, more than anything else I've ever seen. And we have a very good stop management, but I'm just doing a lot of work now. Now that I have finished my bear market avoidance system, I'm going back to my stop management system to see if there's any way that we can make it even stronger. And what stronger means is we don't get stopped out right there if it's a strong stock and it's going back up, which is near impossible to know. But I just want you to know that's the next thing on my plate to try to see if I can tweak that and make it even better than it currently is. So bottom line is, based on everything I showed you, the market looks really good. I don't have a problem with what the market is showing me right now. I am only concerned about that seasonality, which I talked about, and we'll wrap up here. These 2 months can be kind of wonky. When you have really low volume, markets can fall. These are vacation months a lot for traders on Wall Street. So I don't know if that plays into it or not. It certainly plays into the fact that volume is lower. And when volume's lower, we can have some negativity. But I'm looking over 34 years of data. These are the averages. I'm not going to go against that probability. So we may ride a little higher amounts of cash in your account during these 2 months. But rest assured, as we get really close to the end of September and the very beginning of October, we're going back to 100% invested. Okay, so I did that as quickly as I could. We're at 19 minutes. That's as long as I want to go. If you have any questions, reach out to me, Bruce at Fleet Capital Management. You can always do a Zoom call with me if you'd like, and we can talk about your account. And as we get closer to Labor Day, which is the transition day from TD to Schwab, I promise, I will keep you completely informed as to anything you need to do. Nothing will slip through the cracks. Okay, that's a story. Talk to you on Monday. Have a wonderful weekend, and we'll see you then. Bye-bye.